Thanks everybody. Thank you for being here, and always interesting to listen to Larry. One of the things that I'm going to show you today, I think, is a little bit different. You can see where it's AI powered Elliott Wave. Many of you are probably familiar with Elliott Wave and thinking, oh, no, another Elliott Wave guy. But I promise you, what I'm going to show you is something that you haven't seen. I'll be talking rather quickly because of the limited amount of time that we have, but happy to be here with the festival of traders. So what we're going to talk about is Elliott wave analysis versus trading. I found that a lot of people get so wrapped up in labeling their Elliott wave counts that they forget that, hey, we actually have to trade this, and you have to work on the trading aspect of it rather than just being the best Elliottician, if you will, on having the right wave counts. It's a lot more broad when you focus on trading. And we'll talk about trading opportunities within the wave three. That might be a little bit different. Most people, when they're used to Elliott wave, they say stay away from the wave three, let 1, 2, 3, and 4 occur, and then trade the wave five. Wave three is widely regarded as the strongest of all waves. So why do we want to ignore that? Let's look at opportunities to trade that. And we have infused AI into the signals that I've been doing. I've been trading Elliott wave since 2001, so I've been around for a long time. And adding in AI, we feel like we're one of the front runners. We've been sending out alerts to our subscribers at EWOTrader.com for the past 7+ months. So we started back in September of 23. So we'll show you the performance and a plan in detail so that you can incorporate this into your own trading. So as I mentioned, there's a difference between trading and forecasting. Focusing on just labeling the counts. So we would call those Elliott wave analysts versus actually trading. I'm still amazed to this day the number of people that feel like they can do Elliott wave on their own, just looking for the market moves and impulses and corrections. But what correction is an Elliott wave count and what correction is just simply a minor correction? So when we start talking about trading and trading those counts, you want to follow the algorithm, not just looking at it from a manual standpoint. I've yet to find the person that has been successful over a long period of time doing it by hand. Limited markets analyze usually from an analysis. We look at every single market, so we don't focus on any one sector. We look at everything, detailed deep analysis versus high level analysis. Longer term focus on the analyst side of things. We want to be on the shorter term, and everything that I'm going to show you in this presentation, if you're more of a day trader, we focus on end of day at EWOTrader.com, but if you're a day trader, all this stuff works. In fact, during the day, I watch the 3-minute chart on the futures, the E-minis, and all these things work exactly the same way, whether or not you're watching an end-of-day chart or a live intraday chart. So we identify multiple opportunities. You have your favorite stocks. I have my favorite stocks. Google's the favorite stock has shown up more often than any other stock within the world of Elliott wave, and actually just closed out a nice trade on Google yesterday, which turned out to be pretty good timing. So let's talk about trading the wave three and these things called zigzags. Whether or not you're adept at Elliott wave or not, you may have heard the term zigzags. There's 3 corrective patterns within Elliott wave. Everybody knows about the 1, 2, 3, 4, and 5, but the corrective waves that we talk about are the corrective patterns, or flat zigzags and triangles. A zigzag, although technically a corrective pattern, can be used directionally, and we incorporate Fibonacci extensions into the zigzag patterns, and we look for those extension from the Fibonacci levels. You can see 61.8, 100%, and then 161.8%. How do you know how far it's going to go? How do you know which one of those to use? Well, we're going to go through and explain all that to you as I go through the presentation. So I tend to refer to Fibonacci extensions within the impulse move, and that's in the C wave of the zigzag. So I'll explain a little bit more about the zigzag as we go, but in general terms, they're the exact same thing. So you're trading a directional pattern, even though a lot of people refer to it as a corrective pattern. And I'll explain why that's so important here in just a moment. So trading zigzags within the wave three. You look at this third wave, you can see we have the 1 and the 2. So you have an impulse in the 1, a correction in the 2, and then we have a wave 3 move to the upside, and we're going to look for a corrective move within that wave 3. And that's key because that's going to be the entry point. So we want to be really clear on identifying where our entry is. And so I'll give you some signals on how to look at that to identify where your entry point is. I was always interested in how can we trade the wave 3? Why do we want to avoid the strongest of all waves? It makes no sense to me at all. There has to be a way to do it, and zigzags give you that opportunity to go through and trade the wave 3. Now, one of the common questions that are always asked is, well, how do you know when a wave 3 is going to end? That's why people say stay away from it, because it may be the strongest of waves, but you don't know when it's going to end. Well, the zigzags help you do that. And then we take it a little bit further by infusing it with AI. And if you're missing out on AI, you're being left behind. It's the future of where technical trading is going to be. We feel like we're one of the front runners because we have a track record. We've been using it for a while. Started working with the Hub organization, hubb.com, to create AI tools to enhance my alerts back in 2020. The first customer service was launched in 2021, and the calculations on the AI ratings give us an added bonus, if you will, for the strength of the move, and therefore the likelihood that we're actually going to put a position on when we have a trade setup. So I'll go through and give you all that analysis. So using AI to create these trade setups, Hub actually employs data scientists. I'm not a data scientist, nor do I have any ambition to be one. I'm a trader. I've been trading since the late 90s, over 27 years. That's been my life. I was a golf pro before that. It's the only 2 careers I've ever had. So becoming a data scientist is of no interest to me. But here are a few things that they look at. All these things are available to everyone out in the marketplace. You can go out and find price to volume indicator values, benchmark comparisons, the rankings, statistical measures, intermarket correlations, economic data. Notice that there are some fundamentals that are put in here. So it's not just from a technical standpoint. It's not just a technical trading system. Fundamentals have their place. When I left the golf business, I was a financial advisor for 2 years. I'm not a registered investment advisor anymore. I was at one time, but for a couple years, I was in that world, and they told me that, well, you can't offer options to your clients. And I was like, okay, well, I understand that. And then they said, well, you can't trade options in your own account. And I said, bye. That's what I want to do. That's where I'm going to be. And so from that point on, I've just been trading options and educating others on how to do it. That's all I've done for the last 27 years. But you can find this information out there, but they enhanced it further than that. They use regression, clustering, random forest, ensemble-based networks, and neural networks. And it's like, I have no idea what any of that is. And again, I don't want to be a data scientist, but I do vaguely understand neural networks. Basically, it's where you give AI a situation and you ask them to solve the situation. And so that's what we're doing with the zigzag pattern. We're providing, okay, here is a directionally based pattern, and tell us what's the likelihood that this pattern is going to come to fruition. So if you start to add that into the mix, no matter how great your system is, if you start to add that in, now you've greatly enhanced your system, and that's what we do. So I'll go through and give you some more details of that. I actually reached out to the data scientists and I said, hey, can you give me an idea of what you're doing? And this is what they sent me. I have no idea what the coding at the top means. It's one of the data correlations that they added in there. They added over 300. I gave them a set of technical indicators that I look at, the system that I created and started trading with, and had been trading for 2 decades using it, and said, hey, can you enhance it? And can you help me understand what you're doing? And they sent me this. So all these are their codes. The big thing that you want to take from this, somebody looked at this and said, hey, it looks like an ultrasound. But basically, when you see the clusters, that's where that data point is saying, hey, here's the clustering. This is where this code is saying that things are going to go. So what you want to do then is put them all together. And so I'm not going to share all of them with you, so I'll move on here. And they sent me this. And here are, by their own admission, the top 36 data correlation. So there's over 300 of them that they took and added into the basic technical analysis system that I had. And so there you can see all of the ultrasound looking charts. So what you want to do is look at all these and find out where these clusters agree. Forget the outlying things. It almost looks like to me like the dot plot that the Fed uses, but you want to know, where do these clusters agree? And when you have over 300 of these, and then they all agree within a cluster, now you have a signal that you can utilize to help trading. And then the way it comes out on the chart is you can see that it gives you a rating. In this, the AI confidence is 84% that you're going to go up and hit that target. Now, a lot of times people will say, well, where's your stop? Do you put in stops? And I don't put in physical stops because if you've ever experienced a situation where you had a stop and then you got stopped out and then the stock turned and ran back in the same direction that you had already thought it was going to go, that's why I don't use physical stops. But it gives you a stop. You can see the fail zone here on the right. So it has 84% confidence that you're going to go up and hit this target. But if it does fall down to the fail zone, that's your exit. That's when you put in your own manual stops. So that's really key. So it's pretty sophisticated. The average person, as I said, could go out and look at some of those data points, but gosh, you better have a very strong computer system and an awful lot of time to go through and analyze all that. Most of us don't have that kind of time. I may have the time, but I don't really want to do it. On top of that, and so the software that's being used is now available. I'm going to offer for you at the end, as I'm sure you're aware of, but you can access this for free, which I'll talk to you more about at the end. From what the data scientists, and you'll be able to see exactly that kind of a chart on your own charts from this and incorporate AI into your own trading. That's really what I want to share with you, is how you can incorporate AI in here. Why do you want to do it? The bottom line is performance, right? We always want to see where the performance is. I want to show you, look at the percentage of winning trades, and this is not hypothetical. These are actual trades that are sent out to our alert subscribers. 80% winning. If you're above 50%, you say, oh, you're pretty good. If you get to 60%, that's normally a really good system. But look what AI has done to the trading. It's enhanced it tremendously. Now, we're not hitting big home runs. You can see the average return is 28%, but we're doing a lot of trades. So if you do a lot of trades with an 80% win rate and you're at 28%, that's great. I want you to come down and look at where it says average trade size. When we send these out, the average trade size is $500 or less. So we're not looking at putting on big, huge trades. And so when you go through, the time frame has been cut in half. So here's the system that I was using to trade directionally, and the average time in a trade was right around 50 days. And since infusing it with AI, there's COVID on there, so you can see what happened there. There were trades there. But watch what's happened since then. Since I started using AI into the technical trading system, more than cut in half. We're just under 24 days average in a trade, so more than cut in half what was doing before. And if you're an active trader, not only is the time cut in half of being in a trade, look at the trading activity. So starting at September of 23, look, there's 3 times more trades in less than half the time. So those are 2 really good things, right? You're more active as far as a trader, and you're in the trade less time, and set a new record of 19 winners in a row. So that's pretty cool. And this is the website that actually shows those winners. So they're all listed right there. Everything is put there as transparent as you can possibly be going through this. So let's go into a little more detail on how this actual zigzag works. So again, if you have some familiarity with Elliott wave, perhaps you've heard of a zigzag. Maybe you didn't realize you could trade it directionally, but here are the rules and the guidelines when trading a zigzag. And every single 5-wave impulse, every single one. So if you're familiar with the 5-wave impulse pattern, they all start with a zigzag, and then they relabel into the 5-wave pattern. So as a rule, wave B must retrace 20%, so that gets to the 23.6% fib level of whatever wave A did. Now we have a qualified zigzag, so we're going to talk about qualification versus confirmation. And Elliott's guide was that he would like to see it go past that. He wasn't a big fan of the 23.6% fib level. He wanted to see it move more towards the 38.2% level. So I've incorporated that. I think I've read as much of Ralph Nelson Elliott as anyone that exists. It's a system that's been around over 100 years. If you're not familiar with it, I've read just his writings as well as what he talked about in the published material. So look for that to move a little bit further on the wave B. Now, another aspect of this is if the wave B goes down 70%, now you're likely looking at a flat pattern, which is a sideways non-directional pattern. So that's a key level. If it passes the 61.8% fib level, now you're wondering, okay, maybe we're in a sideways pattern. And so that would disqualify the directionally based. And we're using an upside pattern here. We've been moving up for quite a while. I look forward to a down market because we all know things move down faster than they move up. But as far as the rules and guidelines, wave C must, so that's a rule, move more than 90% of wave B by price. So once that wave C has moved past 90% of the B wave corrective move, now we know that we have a qualified zigzag pattern. The C wave is most likely to have a very similar length. So you measure from the 0 point to A. We'll talk about identifying the 0 point in a moment, but that is giving you a general guideline there of about how far wave C is going to go. And then we utilize the fib levels to give us a greater indication of how far the wave C can go. And all this is occurring, once again, within the wave 3. So the third most likely length for the C wave is 161.8%, and that's where the other indicators come in and the AI scores come in to tell you, if, hey, you don't want to get out yet. This is still running. Now, as far as the entry points, the most likely setup is if the B wave corrects 38.2, so there's that fib level that I was just talking about. That gives you an expectation of a 61.8% C wave extension. On the second most likely, the B wave corrects 50%. That's just general technical analysis. We don't even have to talk about Elliott wave there, that oftentimes an impulse move corrects 50%. And when that occurs, then you are looking for that C wave to extend 100% of A. So however far we move from the 0 point to A, that's what you're expecting on the move from B to C. Now, my favorite setup is when you have the B wave correct 61.8%. Now, it says third most likely. The reason for that is because it has to pass 38.2 and it has to pass 50 to get to 61.8. So it's not like this is more rare or anything, or why is it the third most likely? My favorite setup, because I think the 61.8% fib level is the strongest of all those. So if the B wave corrects 61.8 and then we start up in that C and we start to get a qualification, I'm really excited. That's my favorite pattern. I have great confidence that that C wave is going to extend 100%. So we know exactly where to place the exits. So a simplified trading plan here, when you're dealing with zigzag trades, you identify the signal day, whether or not it's qualified, risk versus reward. Enter on the confirmation day. Again, those are two things, two different things, managing and exiting the trade. So we talk about, hey, we want to know when to get in, but we also know when to get out. We want to know when to get out. And so I showed you how we look for the stops, but we're also going to talk about how to know when we're exiting from the profit standpoint. That has a lot to do with the Fibonacci levels. Volume matters. If we're running up in that wave 3 and we're nearing the end point of the C wave and volume falls off, I'm a believer that no matter what technical trading system you use, price to volume always matters. That should be one of the components within your own technical trading system. So whether you like Elliott wave, whether you're buying into AI being the wave of the future, whatever you're using, price to volume always matters. My favorite confirming indicator along Elliott wave, I'm also a believer that no one technical indicator is one you should solely rely on. You should have a technical trading system comprised of technical indicators that you believe in and trust, and then therefore you have patience for them to play out. My favorite one is the DMI. I like that. It's from Wells Wilder. He created RSI. Most people familiar with RSI. Not as many people use the DMI. It's another reason why I kind of like it. So the basic zigzag trade setup is you identify that 0 point. So in the case of an upward move, the downward move is ended. 0 starts, we have an impulse move in the A. Then we're watching the wave B for all those levels that I just went through with you and the rules that we talk about. Once the C wave extends 90% of B, then you know that you have a qualified setup. And as you become better and better at this, you're going to enter that C wave a little bit sooner. You're not going to wait for it to move 90% of wave B. So once you become more comfortable with it, you can kind of relax that rule a little bit. If we bounce off the fib level and all the things are in place, then you can kind of get in a little bit early. And that's the thing that we're looking at. When we look at the AI and all the data points that I talked about, they're not analyzing Elliott wave, but what they're utilizing is there is a wave 3. So they identify the first day that the Elliott wave pattern has relabeled to a 3, and then they go through and put all that AI data, those over 300 data points to it. So we're getting in not just in the wave 3, we're getting in early in the wave 3. So we're getting in early in the strongest of all waves to set up. And then once again, we're looking at those fib levels to figure out where we're going to exit. If we hit the 100%, okay, is it time to get out? What do the technical indicators say as far as the likelihood of an extended C wave? So we want to identify the signal day, and then we want to identify the confirmation day. So the entry threshold is when you close above the high of the entry day. So you have the qualification day. When you close above that, then you have the confirmation day, and that puts you into the trade. So here's where we talk about qualification, and that we had that entry threshold. So once we've closed above that level, now we know that we've gone from qualification to confirmation, and then we start looking for where we're going to exit the position. And once again, we're trading with the institutions there in the wave 3. If you're not familiar with general basic Elliott wave, wave 3 is institutional buying. So that's when they're going through accumulation. So we look at whether or not we're going to go to 100%, 161.8%. We don't want to get out too soon if we don't have to. There's always an exit if you're happy with the profit. You probably know this already. You never want to look back. If you are happy with the profit when you exited and then you go back and say, oh, gee, I wish I would have stayed longer, you can't do that. You'll drive yourself nuts. If you are happy with the gain when you exited, be happy with the gain and move on and look for the next consideration. Looking for reward risk, that's always what the key is. How far can it run before it runs into one of those Fibonacci levels? And then the risk is given to us basically on the fail zone from the AI. Trading options rather than stock. We talk about we're Elliott wave options, so we're trading options. We're not actually trading stock. It works if you want to trade stock itself, but we like the leverage involved with options. We also like the risk protection, and when we set these up, we also focus on the Greeks. So the options that we select have the best delta gamma relationship as far as which option are we selecting, because you have multiple choices there. So we want to make sure that we're setting up the option that gives us the greatest chance of success. So confirming a zigzag trade, I talked to you about this. Once we pass the qualification and we get to the confirmation, then we look for the entry. And so you can see it here on a chart. There's an actual chart, and then you move up and you have your qualification day. Then you have your confirmation day because we closed above that day that hit qualification. Now you're in. And then we look at the fib levels to give us an idea of where we're going to go. And we add in the AI to tell us, hey, this has X likelihood of hitting the target that we want. Exiting the trade, once again, you never are afraid to exit a trade with a profit, so don't worry about that if you get out a little bit too soon. I do that a lot. Exiting with a loss, if it's a failed pattern, one of the great things about Elliott wave is if the pattern fails, the next pattern has an even greater chance of success. So here's the offer that I want to share with you. You can see the link on the bottom there. You can register for a 30-day free trial and get the AI signals. Now, I want to be clear about this. The data scientists at Hub don't share their algorithm with us. They share the signals with us. They keep it, they're proprietary. We have them contracted, so they can't go anywhere else. We got that all locked up, so they are ours. Somebody asked a question a couple of days ago, well, what happens if the data scientists don't want to give you the signals anymore? We've got that locked in. So we get the signals from them. We have them locked up contractually, as I mentioned, and so you can take advantage of this absolutely for free. We're not going to ask you for your credit card information, so it's not one of those things where it's 30 days free and then you get charged. We're not doing that. We just have a simple, plain, free offer. We're that confident that you're going to like this, that you're going to reach out to us and say, hey, how do I find out more about this? I really like what's gone on the last 30 days and I want to be a further part of it. We have that kind of confidence in it. So we aren't going to ask you for your credit card information up front. You can see that you're going to get AI trades both within Elliott Wave and Delta Neutral. So if you're more of a sideways trader, you'll get those signals as well. If you're a day trader, great. You can apply what you learn into your day trading. But we send out the alerts through SMS. So we will need your phone number so that we know how to send you those through text and email. We'll give you entries and exits. So we'll give you the signals, not just for getting in, but for getting out as well. And some commentary from time to time. I'll post, hey, this is what's going on with this stock. It's interesting with what's happening with our signals, etc. Twice a week, I'm on live, and you can ask me questions. You can come on and ask me live questions twice a week. We do have a support email address where you can send in an email 24/7. Or you can attend one of the live shows, ones during market hours and then ones after market hours. So whatever your schedule is, and if you want to ask a question directly to me, you can do that. And as I said, the credit cards are not necessary for access. So I think I got all this done. That was an hour-long presentation normally within the 30-minute time frame here, but we'd love to have you take a look at this. It's free, you have nothing to lose. And nothing, no credit card information required, etc. So I think you'll find this something different, something new, and something forward-looking because we do feel like this is the way of the future, and that we're front runners in that. We're in the early stages of it and have a 7+ month track record, as you saw the results. So with that, I look forward to having you join us and see what we're so excited about. You know, when you've been around doing this for 27 years, you know, I still get excited watching the markets. I always like it when 9:30 Monday morning comes around. But to get this excited, having AI just greatly improve a system that I was already happy and content with has renewed excitement. So in my stage of this game, to have that kind of excitement, I'd love to share that with you. So that's our offer there. Come join us and find something that's really new and really exciting moving forward.